Hi, this is PR Sundar. Welcome to the special episode. I am going to recommend a stock. And disclaimer, I am not a SEBI registered analyst. So this is given for educational purpose. If you want to take position after consulting your financial advisor. And many people just to troll me, they say, sir, you are my financial consultant. Okay, I am not your financial consultant. And more interestingly, I am not going to name the stock now, and I will be naming the stock little later. The first thing is that, where our market is headed. And this year, the markets were too volatile. Despite being volatility, I could say our market did not even fall 20%. Officially, falling 20% is considered to be bear market. 0 to 10% is considered as a normal up and down. 10 to 20% is considered as a correction. More than 20% is considered as a bear market. Our market did not go into the bear market despite such a big hangama in the world markets and inflation, even the developed countries having inflation above 9%. Now, recently, if you look at last Thursday, Singapore Nifty was trading at 15,800, and this Friday, now, we have closed above 16,700. So that's almost 1,000 point rally in just 1 week. What has changed? Number one, as of yesterday, FIAs were continuous buyers for last 4 trading sessions. And this video is being shot on Friday afternoon, so the Friday data is not available yet. And probably today also they would have bought. The continuous buying FIAs ahead of Fed meeting is very, very surprising. And let us forget about all those things. What is more important? Now clearly the markets have turned around and FIAs have become bullish, and negative news is being ignored by the markets, not only in India, even at the global level. Yesterday, that is Thursday, ECB announced 50 basis point rate hike, but despite that, the global markets did not fall. People expected only 25 basis point, but they increased 50 basis point. And Dow has been opening lower for the last 2 trading sessions, but end of the day, ending in green. So this shows that the markets are bullish. Now, markets are bullish. So which stock to buy? And always one question comes, sir, if I buy this stock, it goes up, profit is okay, but if it comes down, loss, where to keep the stop loss? So that is the big dilemma in stocks. Okay, let us leave this. Now, let us move to US markets. In US markets, you have options, and the options expiry, S&P 500, they have everyday expiry, and Dow and Nasdaq, I think they have 3 days in a week expiry. But do you know who is the largest option seller in the world? It's Warren Buffett, and he sells options not less than 1 year. So US is very, very popular for options which are expiring more than 1 year. Any option that is expiring more than 1 year, it's called leaps. So leaps are very, very famous, and those leaps are available for indices also and stocks also. You want to buy Apple call option expiring 2 years down the line, you can buy. But in India, you don't have long-term options for stocks. You have long-term options only for Nifty and Bank Nifty. But however, Bank Nifty, absolutely no liquidity. But Nifty, there is plenty of liquidity. That too up to 1 year only, not more than that. Now, is there any way I can buy one option in a stock expiring maybe more than 1 year? And that is not possible in India. But today, I am going to give another option where you can actually buy an option in a stock, but it is not known as option. Now, let me come back to the main topic, warrant. What is a warrant? So, in stock market, the warrant means you buy a warrant by paying a certain price. So, that warrant, you can exercise the warrant at a particular time and at a particular price. In 2020, during Corona period, HDFC, Housing Development Finance Corporation, came out with a warrant, and that warrant was priced at 180 rupees. It was not given to the Indian public, it was given only to the qualified institutional bidders. That means FII and domestic institutional investors. Had they given to retail people, I would have bought it. But it was not given to the retail people, only for QIBs. The warrant was priced at 180 rupees. If you are having that warrant, you are eligible to buy one share of HDFC anytime up to August 2023. This is July 2022, August 2023. You still have about 13 months time. Anytime you can buy one share by paying 2,165 rupees per share. 2,165 rupees per share you have to pay on top of what you already paid for the warrant. Assume that you bought the warrant at 180 rupees at that time, and anytime you can return that warrant to the company, you can ask for one share. That one share will be 2,165. So 2,165 plus 180 which you already paid, and together it costs how much? 2,345, right? Yeah, 2,345. So you can buy one share at 2,345. You may remember a few months before HDFC went to 3,000 rupees, and after that, because of the global correction, the prices have come down. Now, I told you FIAs have turned net buyers and they have become bullish, and usually these are the stocks which are called FIA favorite stocks. If global cues continue to be good, if FIAs continue to buy, we can expect HDFC to move significantly higher during the next 1 year. So, what are the options with you? Either you can go and buy HDFC shares from the stock market. If it goes higher, you will make profit. Of course, if it goes down, you will have to lose. But instead, if you buy this warrant was issued at 180 rupees, now trading around 400 to 410 rupees. And today I checked, the last traded price was 410 rupees. So you can pay 410 rupees and you can buy this warrant. You buy this warrant, you pay 410 rupees, then up to July 2023, you can give this warrant to the company. You can ask for one share by paying 2,165 rupees, which means that right now, if you pay 410 rupees plus 2,165, so the price works out to be 2,575 rupees for you. And in case market go to 3,000 or 3,500, you can buy the share, you can make profit. However, if you are a holder of a warrant, in case price is not favorable to you, the price, let us say tomorrow it goes down to 2,000 or 1,500. You do not want to exercise the warrant, you can just leave it. And whatever the money you paid for the warrant, that is getting wasted. So, this is just similar to an option buy for a long term. Let us say today you go and buy HDFC warrant for 410 rupees. Market goes higher, you will make profit, but market goes lower, the 410 rupees that you paid, so that will be the maximum loss you will be having. I think warrant lot size is about 600. So 600 into 400 approximately, it's about 24,000 rupees. So you pay 24,000 rupees, you buy one warrant, and if you lose, your maximum loss will be that 24,000 only. But in case HDFC goes higher, you can convert that warrant into a share by paying 2,165 rupees to HDFC, and you can get one share, you can make profit. How to buy? This is not equity, this is warrant. So the symbol is HDFC W3. So HDFC warrant 3. So that's the symbol. And if you do not know, you can always ask your broker. And if you are using a trading terminal like Nest or any other terminal, so in place of equity, you just click, you will get a pull down menu. You can look for W3. This is one stock I am recommending. And once again, a disclaimer, I am not a SEBI registered research analyst. So this is my view. I am just sharing my view. And you buy this, your maximum loss is 24,000 rupees. But maximum profit is unlimited if HDFC goes higher. And I'm hoping that HDFC will move higher because now FIIs have turned net buyers and we still have one more year with us. Hope you enjoyed watching this video. Thank you for watching.